warm welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Farah Malik, Managing Director, Nissan Joseph, CEO, and Mr. Kaushal Parekh will be joining us soon, who's the CFO at Metro Brands joining it. Welcome to the show, ladies and gentlemen, and a pleasure to speak to you as well. And it's interesting to see how the journey of Metro Brands has been, because we've seen it grow. I mean, I have seen it grow since I was a child as well. And I have been one of the first few customers probably that you would have had since, in the last 15, 20 years. So really appreciate a brand grow in front of our own eyes. So congratulations to achieve this milestone.
Thank you so much. Thank you.
Right. So to start off with, firstly, if you could just help us understand before we jump on to the IPO as to how has the journey been for Metro Brands from inception to now?
So I'll take that, Nissan. So I think, 55 years ago, this company was started actually by the first store started by my grandfather, who was a shoe salesman and moved up the ranks to then become owner because of the partition. And, he got a chance to buy the store. It then went on to my dad, who started in business, started working in the business actually at the age of 14 in his free time. And then started the store that we now see at Kulaba at the age of 19. I think, so it has always been a family-run business, but we've always from a very long time ago decided that we wanted it professionally managed. And so we've had a professional CEO now. Nissan has joined us in July. Kaushal has been with us for a long time as well. But basically the whole theory was, how do we take it from one store to many? And there was a thought at that time, that the best managers are the owners of the business. And I think to replicate that, what we had to do is really create a very strong entrepreneurial culture within the company. So today also here, our managers, 536 of them, like our chairman, have grown from stock boys to salesmen to managers, all internally promoted. We attract people from very humble beginnings because you do have to touch the feet of the customers.
I know.
And because of this, there's only less than a 2% attrition rate. All of them are on a variable pay. They have a vested interest in the sales of the store. That has been one of our greatest strengths today. Along with that, we also have a 250 vendor base, small carriers to large factories, where we source goods for our customers of the highest quality. Basically leading to my third point, which is the fact that the company has a very asset-light model. With the variable structure that we have in the front end, with the fact that we have only third-party manufacturing, we have a very optimal store size, and we have an active brand portfolio management. We have now managed to create a very asset-light model, which has held us in good stead. And the financial discipline of the company, if you see the track record, has had a very strong background of profitable and sustainable growth, which has, held us during COVID and going forward as well. Can go ahead.
And that journey also includes the transition to the e-com space, right? So we've bridged that gap. 70 years, and it's not a 70-year-old retailer in terms of how we operate. It's very nimble. It's also, we made significant investments in technology, both internally and with our supply base. So we've been able to pivot and move to where the consumer is shopping today. And our online sales are growing, our omni-channel sales are growing, and we've definitely curate products for the online space too. So it's been a long journey here, not just opening up to 598 stores in 30 cities, but also making sure that it's integrating with our e-commerce business.
Absolutely. And it's really interesting to see how a traditional run business transitions into a professionally run business successfully. So these are growth stories, and case studies that everyone should be looking at as well, because that transition is, there's a very thin line where things can go wrong or things can go right. So it's really interesting to see these kind of successful transitions that happen, and that also in not a very long period of operations. I mean, you're talking of 50 years. I think usually you see these kind of transitions which take really long. So congratulations on that front as well. Moving ahead from here, let's go back to where the IPO goes. If you could just give us details of the IPO, what amount are we looking to raise? What is the objective going to be looking like?
Sure, Hiral, let me take that. our overall IPO size at an upper band would be 1,367 odd crores. We have both OFS and primary portion. Promoters and promoting selling shareholders are diluting about 8% of the overall 10% that we are offering to the public, and about 295 crores is the primary issue, the funds that are going to come in the company. I would just like to highlight that even after this 8% dilution, promoters and promoter selling shareholders would be holding 75% of the company post issue as well. Mr. Jhunjhunwala, who invested in our company in 2007, he is not offering any shares in this OFS, which is sort of planned. In terms of the primary portion, 295 crores, we have identified in our object clause, you've stated we will be using this to open 260 stores over next 3 years. These stores will be for Metro, Mochi, Walkway, and Crocs brand. Our price range, as we have disclosed, it is 485 to 500. Our issue is opening tomorrow, that's 10th of December, and it would be closing on 14th of December, that's Tuesday next week.
Right. So that's with regards to where the IPO goes. Talking about where business is concerned, two factors. Let's first start off with, firstly, source of revenue generation. One, when we talk about in-house brands versus brands which are third party to us, how is the breakup looking like between in-house brand sales versus third party brands right now?
Sure. So what we're running about is 70% of our sales come from our in-house brands. And 30% come from outside brands. And this is a number that, people have asked us, do we want to see it grow? Do we not want to see it grow? And the fundamental answer to that, Hiral, is, what does the customer want, right? We're very focused on what does the customer want? What do they expect? The 30% of the brands that we carry that are external brands also fill a void in our current assortment, right? So you look at a brand like Crocs, which has a distinctly unique proposition, or Skechers that also has come on very strong. So we look at all these brands and say, that fills a void in our assortment. So we bring that in. So it's really not to just add more brands. It is really making sure we are curating a range for our customers that they've come to expect in a Metro or a Mochi store.
Adding to that here, when you're looking at brands, I think what has happened in the last couple of months is also we've transitioned into becoming a platform of choice for brands globally, And when you look at the experience with Crocs, where we're handling their EBOs and their stock within our Metro and Mochi outlets, to now signing an agreement with FitFlop, where we become their sole partner. So we are handling their EBOs, which are exclusive business outlets, distribution to multi-brand outlets, where we will also be supplying to some of our competitors, the e-com journey for them, as well as the omni-channel space. So I think it's growing more in terms of that because of our various strengths that we have, sort of shown a track record of. People are opting to work with us more and more in this exclusive fashion as well.
Right. And with this, what would our market share be? Because last what I was reading is we are ranked 4th in the domestic footwear market amongst, if you have to look at the top 5 brands as well. So overall, what would our market share be in the domestic market? Because I know there's a huge unorganized market as well that functions in the footwear segment.
Let me take that, Hiral. If you refer to the CRISIL report, overall size of footwear market is around 90,000 crores. 70% of that amount of that number is unorganized sector. And organized sector would be somewhere close to around 25 to 30 odd crores. Within the organized footwear space, our share would be approximately 5%.
Okay. But Hiral, just to give you some numbers, if you look at the fashion footwear space, even online, we're in the top 3 brands. Even offline, I think in the fashion footwear space, we would definitely be considered one of India's largest pan-India specialty retailers. So I think in our niche, I think we would show leadership. But if you look at it as an entire footwear industry, definitely it's very fragmented.
Hiral,
Right.
I'll just like to add one point here. In terms of size, we're number 4. But if you see our profitability ratios, in
It's
terms
the
of say
highest.
our
Correct.
operating margin, our EBITDA profit margin over last many years, if we have to say about last 5 years, our margins are the highest as compared to any other player in the industry. Even our net profit margins, barring FY21, because it was impacted by COVID. But if you focus on retail-led player, I think we were the only one, or very few of them, who reported profit even in the COVID impacted year, that's FY21. We reported a positive PAT margin of 8.1% in FY21.
Right. Now that we've transitioned to COVID as well, let's get on to how has the impact of COVID and the transition been in the last 18 to 24 months? Because yes, initially retailers across categories, across sectors were hard hit because of stores being shut down. Then when the point came that you could open it up, there was a lot of backlog of stock that need to be cleared as well. And now slowly, steadily, we see a lot of new production, etc., that comes up from the retailer side, maybe in footwear, in bags, in clothing, etc. So how has that journey been for, a company like yours?
Sure. Let me take that. Hiral, as you know, obviously COVID had severe impact on all the retailers. But let me talk about few points that we did sort of differently, or say which helped us to achieve the kind of results that I just mentioned. If you see our gross margins, even in the COVID impacted year, they were rock solid at around 54.9%. We didn't discount our products. Even in COVID impacted year, more than 90% of our sales were full price. Obviously, second important point was in terms of rent negotiations with all our partners. That exercise we could complete timely, and that helped us sort of keep our rental costs in check. Apart from this too, our variable cost structures, which Farah referred to, pretty much entire sales team of ours are on variable structure. And this, all these factors sort of helped us ensure that we demonstrate or give that positive result even in the COVID year. Another important point, even in that year, we were aggressive in terms of our store openings. We opened about 59 stores even in FY21. Our growth momentum was on, and we kept sort of focusing on adding additional number of stores.
And it wasn't just a matter of surviving, Hiral. It was also trying to say, how do we want to take this going forward? And we saw the consumer shift to a couple of things. One is they shifted to a more casual footwear and open footwear, and we made sure that we righted our assortment to cater to them. That's number one. But the biggest shift that also happened was they started using the e-commerce channel as a convenience channel. At one point, that was the only way you could get products, right? So what we did was also ensure that we invested in our technologies at that time to take advantage of it. Pre-COVID, our online sales were roughly about 1.5% of our total business. Today, in a very short time, we've already grown that to 12% of our business today.
Right. So with all of this now, if you have to look at on the production side of it, I think you are one of the few retailers who sources all its products through outsourcing arrangements, and clearly maintaining a very asset-light business model as well. So what's the strategy from here on? Will we continue maintaining our asset-light model? And how many, outsourcing, from how many players do we outsource manufacturing right now?
So here we look, currently we are outsourcing from about 250 vendors in India. These include small scale carriers as well as large factories. We also source from some international factories. That sourcing has obviously decreased with all the supply chain disruption that we've seen recently. What is interesting for you to understand is basically when we're looking at our sourcing strategy, right? We're looking at where can I source this product in the best way possible. So if I want to source a Kolhapuri chappal, and Kolhapur is a small scale guy is making it the best in Kolhapur, and he is only making 100 pairs a day, I will still source from him. And if I'm looking to source, let's say, comfort men's shoes, I'll source from a factory in Brazil, which is making 1 million pairs a day. So our nimbleness and our agility and ability to work with all these kind of suppliers has been one of our biggest strengths. Also, a lot of them, these small scale suppliers, have grown with us. They've been working with us for over 3 generations. So like we have been investing in the business, so have they been investing. More importantly, we have actually set up systems in their computers in each of these factories, which allows them to see how a style sells, their style sells throughout all our stores, giving them as much market intelligence as we would have. So this has helped us a lot in terms of supply chain. In addition to that, we've implemented a technology called theory of constraints. This was about, I'd say, more than 5 years ago now, or probably more than a decade ago. And really what that allows us to do is ensure that we're optimizing inventory in each of our stores. So every month we will cross-ship 100,000 pairs from stores which don't sell that merchandise well to stores that sell that merchandise well. And this nimble supply chain, one of the biggest benefits of this is that over 90% of our sales are contributed from fresh sales. So only 9% is sold in discount, like in contribution to our overall sales.
Okay. So with all of this now, how does the realization per unit kind of a matrix work for you? I mean, is that something which is usually stable in the last couple of years? Or do you see major gyrations taking raw material prices into consideration?
So for the last couple of years, we saw quite a steady ASP. Granted that it's higher than the competition, that's largely because we don't dabble a lot in the homeware sector. But you have to remember that we carry about six months stock already on our books, right? So you'll see a price increase for sure because raw material prices have been increasing in the next 3 to 6 months. But what we have done is we've worked very closely with our vendors, where some amount of the cost they have borne, some we have borne, and some will definitely filter through to the customer. So we're looking at a 3 to 5% price increase in the next 3 to 6 months.
Right. And overall, currently as well, if you have to look at, I know we can't talk about a lot of forward-looking numbers or anything because of SEBI restrictions, but if we have to look at the next few milestones, what would they look like in terms of growth, in terms of strategy, in terms of a business model for us, if you have to take 3 or 5 year perspective?
Sure. So as we said in our disclosure, our next milestone is getting the 260 stores that we said we'd open in the time, which is the end of fiscal 25. So that is our first one. And that growth is not specific to any one of our singular concepts. That would be spread across Metro, Mochi, Walkway, and Crocs. So that's first. The second milestone is the launch of FitFlop under us. FitFlop's already been in the country, but we're going to be taking it over sometime in the coming months. So that would be the next milestone that you could say that this is the next thing coming up. The third one would be continuing our journey on this e-commerce adoption, right? I don't think it's ever over. And even when you think it's over, there's new technology that's coming in. Rafiq, our chairman, says that technology has the lifespan of a banana. Right. So you got to constantly be alert as to what's happening on the e-commerce space. I would say those are the 3 big significant outlooks that we have. From an internal perspective, our 5 pillars of growth are very simple. One is continue to open our stores, like we talked about. The other one is to find new brands, like we did with Crocs and FitFlop. So we believe that this is the decade for India. There's a lot of things happening around the globe that makes India a very attractive market for global brands. And we want to capitalize on that. Global brands look to us and say, here's an operator that has pan-India presence, that has operational excellence, and has brand savviness to understand the brand ethos of different brands. So, we're a very attractive proposition for outside brands to come into India. That's our third pillar. And then, of course, we talked about e-commerce. On top of all this, Hero, we think COVID's been a disruptor for many, many industries. Retail is not in any way protected from that. And there's probably people with capital issues that have struggled through it. And we think there'll be inorganic opportunities to also grow our business as we move forward.
Absolutely. So any plans to enter the global markets?
Yeah, so our vision is very simple. We want to be the largest specialty footwear and accessory retailer in India. And I think I should underscore the India. And the reason for that is, it's very simple. We see a long runway for each of our concepts in India. Our Metro, which is the one concept that we have the most stores in, is only 220 stores. When you look at some of the other players in this market with one single brand, they could have upwards of 1,500 stores. So if you look and say, wait, you mean Metro is only 200? You got Walkway and Crocs only at about 150. You got, Crocs and Mochi at only about 150. You have Walkway at about 70. You got to stop and say, oh my gosh, if 1,500 is a possibility for a concept and you're here, stop messing around and losing focus, looking outside of India. Focus on what's right here at home and the opportunity we have here.
Absolutely. And taking our population and the size of our country into consideration, I think there are immense opportunities for businesses to grow in-house itself.
Yeah, and Hiral, I must add, don't forget there's rising urbanization in India and also rising middle class, right? And both of those trends create tailwinds of people moving from the unorganized sector that you mentioned into the organized sector. That's number one. And as aspirations rise, as incomes rise, so do aspirations. People want better products, better brands. And, Metro plays to that vortex of space that happens when those two trends start becoming a great tailwind. And so we see a lot of opportunity for growth going forward.
Absolutely. And for consumer brands, I think India is one of the best locations to actually be a part of. But thank you so much, Nissan, Farah, as well as Kaushal, for joining us on the show. A pleasure to speak to you. Congratulations once again. Stay safe. Speak to you soon again, and good luck for the IPO.
Thank you.
Thanks, Hero. Thanks very much.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.